Dear viewers, this video is for somebody who is in early part of life, age band 20 to 35. In this video, I am going to talk to you about 3 things on which you should not listen to your parents' views. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, practicing financial planner.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, NRI Money Clinic is getting more organized now. Going forward, we'll be uploading 2 videos every week. The same day of the week, same time of the week. On Friday, in a program titled Your Money, Your Life, I will be sharing my ideas about financial planning, my ideas about money, and my ideas about life. On Tuesday, 4 p.m. IST, one expert will appear on a program titled Expert Speaks. The expert who comes on the channel will be a subject matter specialist from the field of taxation, legal, financial planning, stock markets, and related topics. Now you can expect videos from us every Tuesday, every Friday at 4 p.m. IST. Dear viewers, now you are out of the college, you have found a job, and you are drawing a salary now. Your parents see that you have become independent, and there are a lot of ideas or a lot of suggestions parents keep giving to you. They also share their life experience, they also share their views about life and what they expect from you going forward. In this episode, I am going to talk to you about 3 things on which you should not heed to parents' advice. It is very essential that you shun it away with a smiling face. What are these? Let's look at one by one. Number 1, your parent will ask you to buy a house early part of your career. It's obvious that's what your parents have seen during their lifetime. During their lifetime, getting a job, getting married, buying a house has been the objective of their life, and it used to happen at very early part of their life. People will get a job, stay in the same company till they retire, and they will retire in the same place. All those things were fine when the society was at that particular stage. Things have changed now. Nobody joins the same company and retires in the same company. It's almost impossible today. You may get a job in Bangalore, and after some time you may migrate to Hyderabad, you may move to some other country. You could be working in one country, you could be moving to another country. Now if you heed to the advice of your parent and try to go and buy a property yourself, this can become a cardinal mistake. Why it becomes a cardinal mistake? For 2 reasons. Reason number 1, you may not stay in that particular place at all. Reason number 2, in the early part of your life, there are a lot of things which you need to be attending to. For example, you have to build your emergency funds. You could have taken up a job soon after your graduation. You want to study further on, or you want to add skills, and you don't feel like asking your parent to fund your education. So you need to be building an emergency fund. Use the money that is available to upskill yourself, to build these emergency funds, and to plan for rest of the things in your life. Now if you entangle yourself by buying a house, keeping a fat EMI, probably you will end up with very less money for what you need money for. Likewise, the property what you are going to buy may not earn you a great deal of rent, or it may not be useful for you to go and stay. I have seen in the lives of many people, those people who bought houses early in their careers have felt bad, or they felt this was a wrong decision in their life. As a planner, I also feel you should not hurry about buying a house early in your career. There is an exception to the rule here. Suppose if you are a person who is living in developed countries like Canada or US or in Singapore or in Japan or in Eurozone. In such cases, probably a deviation can be found. That's because the rentals that you pay on your properties is very higher. The EMIs you could be paying for the property will be much lower. Likewise, finding a tenant or your ability to sell this house is far better in the developed world. But if you are looking from an Indian context and if you are asked to buy a property early in life, it's best you avoid that. The second area where you should not heed to the advice of your parents is your parents need a large health insurance cover, but they will never admit it. They say what health insurance that they have is sufficient. Now you are earning, now you are still with your parents, you are not married, you have lots of cash in your hands at the moment, you want to do something for your parents and you throw this idea in front of your parents, they say they have got a health insurance. You have to probe further on there. They may be having a health insurance for ₹1 lakh, 3 lakh rupee, 5 lakh rupee. In today's time, 3 to 5 lakh rupee health cover is not a big health cover at all. If you look at the hospital bills, even for the ordinary things, always you end up paying lakhs of rupees. God forbid if there were to be incidences like cancer or a kidney failure or something which is major, it can burn a big hole in the life of your parent. If your parents cannot pay for it, obviously the responsibility of clearing these bills will invariably come on you. So the best way to handle this is, yes, you say fine for your parents. Instead of buying them a normal routine health insurance cover, please gift them with a top-up plan. A top-up health insurance plans are quite cheap. You can gift them with a top-up health insurance plan of maybe 25 lakh rupees and leave out the base plan whatever your parent is already having. By doing this, you are making sure that your parent gets the best of the medical treatments in the event of they needing one. Likewise, you are helping yourself too, because if parents cannot afford it, the responsibility of the clearing those bills will fall on you. If you have this top-up health insurance plan gifted to your parents, in that case, you can also save yourself from a big trouble in your life. Point number 3, your parents need retirement assistance, but they don't admit it. They behave as if they have no expectation of money from you. A self-respecting parent will not find it very comfortable to ask money with his children. But it's your responsibility to find out what's happening in the life of your parent and give them a helping hand. Imagine the situation of most of the families, what's happening in life. In India, most people are either in the middle class families or lower middle class families. There are few people who are from the upper strata of the society, but in most cases, people belong to middle class or the lower middle class. The parents will go out of the way. They try to educate their children and in the process neglect their retirement planning. By the time the children get educated, the parents are already staring at the retirement stage and there is not much of a time for them to build the retirement corpus. They'll be left with a very small retirement corpus. Many parents have a pension which is fixed income in nature. They are going to live long. The fixed pension what they are going to get will run out of purchase power within next 10 to 15 years. These are the practical problems your parents will go through. If your parents did not have the money and you wanted to study and you wanted to pursue your education, what you would have done? You would have taken an education loan, or you would have borrowed money from your friends, or you would have borrowed money from your relatives. If you had taken an education loan or if you had borrowed money from your friends or relatives, what would you have done? You would have been under an obligation to pay back this loan from whomever you have taken this loan. Imagine this situation. Now think that you have borrowed this money from your parent. The parent has compromised his retirement planning to make sure that you are well educated. It's time that you pay back to this parent by gifting them with a pension plan. See, you get graduate by 20, 21, maybe 22, 23 years of age. Then you take up your job. Unlike the olden times, you don't get married that early now. Very rarely you see these days people getting married before the age of 25. Generally, if I look at the current generation, they get married around 30 years plus or minus 2 years. That's the age at which people get married. So there are at least 5, 6, 7, 8, 10 years of time which is available for you where you are single, you are earning, and you don't have too much of things to do in your life. Make use of this time. Try to repay it to your parents, not by remitting money into their bank account. Instead, gift them with a pension plan. Today, pension plans are available where you can contribute a significant amount of money or a defined amount of money every year for 5 years, 7 years, 10 years. At the end of the time, the pension can be paid to the parents. Such kind of plans are available for you from different companies today. So make use of this time from the time you become a graduate till you get married to gift your parent with a pension plan. This is the best service that you can do it for yourself. This is the best service that you can do it for your parents. Charity always begins at home. Once you get married, you will come under the pulls and pushes of life. In place of one person, there are two lives there now. You will enter a high expense period. If you plan to do it subsequently, you may not have the required bandwidth at that point of time. So as soon as you start earning, please gift a pension plan for your parent. By doing this, you are helping the parent, you discharge your responsibility towards the society, and you save yourself of the trouble of helping your parents at distant point of time. Dear viewers, if you want to gift a pension plan for your parents, you can make best use of our services. Our numbers are shown here on the screen. You can send us a WhatsApp message, and one of the financial planner who is working with you will help you to design a pension plan for your parents. You can choose an amount that you feel comfortable. You can choose a time that suits you, whether to pay for 5 years, 7 years, 10 years, depending on what you earn and what you are comfortable with. But definitely your action today can help your parent live a dignified life for the rest of their life. Dear viewers, hope the points that I have raised in this video helped you to understand how you can discharge your responsibilities towards your parent. Please like this video. If you are a person who is watching this channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic on your money, your life next Friday, same time.
Press the bell icon for more details and subscribe our channel.